Hello, folks. Welcome to Pro Trader Strategies. We are an educational company, so if you guys want to learn about options and trading in general, please hit that subscribe button down there at the bottom and make sure you click on that bell so that you get notifications. I'm going to be doing daily market commentaries in the morning here right around 11:30 Eastern. I also do webinars on Thursday right after the close, but I will pop in now and again talking about trades that I find, when, where, and why I'm going to put those on throughout the day. So please make sure you have that bell clicked on so that you guys get notifications when I'm hitting live. And comment over there at the side throughout this video. I'm going to make sure everybody is clear of concept before starting to move on. So feel free to reach out over there in the comment section with anything you want to talk about. If you want me to spot a trade for you, we'll look at those there going forward as well. So please comment over there at the side. I'll be happy to even circle back around later on this afternoon and even tomorrow to make sure anybody that comes through is clear of concept. And finally, smash that like button for us. It really does help us out. As we are in this video going to talk about the economic data, see how that impacts the overall markets with some market analysis. And then ultimately what we're going to try to do with that technical analysis is decide what type of strategy we are going to put on a underlying based on what we are going to talk about with these options, because we have specific rules on options. If it's a bullish strategy, we don't just go out there and buy a call. What we need to know is whether or not those premiums are expensive or are they cheap. So check that out. Join us on Thursdays after the close, where we will be drilling down on a different option component each week. All right, so let's talk about the economic data today. Across the pond, the only thing we really got was the bond auction out of Spain, and it was pretty much in line with expectations there. Not a whole lot to see here. But then here in the United States, we got all kinds of economic data. That's why I'm rushing through all this just to get to this, because Philly Fed, we got a mixed bag here, folks. Philly Fed manufacturing index came in lower than expected at 21.9. It was expected to be 28. On the flip side, we got the Empire Manufacturing Index coming in, knocking it out of the park at 43, folks. I mean, 43, expected to be 17, just to put it in perspective there. So just crushing it. And if you even think about last month, we got a 17 as well. This 43 is going to be the highest number we've seen basically since 2004, 2005. We may have gotten close in 2010, but that number is just astronomical, to be quite honest. Just have not seen that kind of number anywhere. We're going to have to check that out when we come circling back around next month to see if there's any revision there, because that number really crushing it. All right. Now, we just heard that great number out of Empire State Manufacturing. And then on the flip side, we get industrial production coming in lower than what was expected at 0.4%, expected to be 0.6%. And they even revised last month number down to 0.7, just albeit slightly by a couple of tenths of a percent. But at the end of the day, these numbers are pretty decent, but they're missing on expectations. And then we're seeing this Empire Manufacturing number, which would lead us to believe that industrial production or even capacity utilization, which came in lower than expected at 75.4, expected to be 75.7, those are cutting back on production. How is this number, this Empire State Manufacturing number, so far out of whack? It's just a little bit bizarre that I'm not going to go full Monty on this one right now. I'm just going to let that one kind of fester for a little bit. All right. And then finally, natural gas storage is coming in at a build of 55 billion cubic feet, only supposed to be a build of 45 billion cubic feet. So should put a little downward pressure on at least natural gas. We're not seeing that necessarily across in crude oil futures, because crude oil is seeing some weakness. Yeah, we're getting a little bit of a bounce. Maybe somebody could call it off of that Philly Fed number, because, or not the Philly Fed, sorry, the Empire Manufacturing, that was the number that crushed it. That could have given a little bit of boost here, but we're seeing the Empire Manufacturing numbers slow. And you remember me talking about this yesterday, the major driver of demand for crude oil comes from the manufacturing sector. So when we are looking at this, even though folks like you and I are driving a lot more, maybe, we're probably not going to necessarily see that demand show up in manufacturing if manufacturing is starting to cut back a little bit here. All right, so crude oil pretty much unchanged on the day. I was expecting a little bit more follow through to the downside, but we were actually seeing some strength out of like Marathon, ConocoPhillips. Some of those names were starting to see some strength, and maybe looking like we're getting a little bit of a correction here on some of these markets here, where we're going to need to take a look at a little bit more deeply into those. Bonds continuing to hold on to that 160 handle. Now, I've talked about this for a while. I think that 160 handle is somewhere where we're going to stay for the foreseeable future, that being basically the rest of 2021. And now going into 2022, we could start seeing those asset purchases ebb a little bit, meaning they're going to slow down on those asset purchases. Those asset purchases are buying the bonds. So when you hear people talking about the FOMC keeping interest rates suppressed, it's because they're buying bonds. And I talked about this yesterday in the video, how it's like a teeter-totter. As bonds go up, interest rates go down. So if the Fed is buying assets, when you hear them saying they're buying assets, they're buying bonds to suppress that interest rate. All right. So does that make sense? It's like the teeter-totter. As bonds go higher, the interest rates go down. Inversely correlated there. And then we go over to gold futures. It looks like a bit of a pause here. Now, something to note, we did get a crossover a few days ago, and I kept wanting to mention this. The 50 crossing over the 200-day is a gold cross, which means that it is starting to resume a bullish trend there. A death cross is when it goes the other way, but right now we have a golden cross here, which is looking like a very bullish move here. Bitcoin was looking like a bottom yesterday, but I talked about this. This isn't probably going to have a massive run to the upside. I don't know if we're going to see that in any of the cryptos, because we're seeing the volumes hold off a little bit. And one of the problems with having diamond hands, folks, is the fact that you bought in, you're holding on, that if there are no new buyers in there, the new sellers or the people that are selling is going to cause this to start to roll over. So be very aware of that. If you're trying to hold on to this diamond hands theory that that's going to hold this market up, it may very well not do that unless you are coming in with more and more money to support this market. In the VIX, we were getting a bit of a spike, but the market's starting to calm down a little bit as we're going on throughout the day. Now, we've been getting all kinds of wild swings throughout the day lately, and that is working through this inventory, this overhead. Remember, I talked about the market's been moving higher, especially in the NASDAQ, based on some of the major tech names in there, like the FANGs, and that's driving this market higher, whereas the broader stocks in the index for the NASDAQ, almost 50% of them are below their 50-day simple moving average. And when you hear me talking about being below a 50-day simple moving average, which is this line right here, that starts signaling basically medium-term bearishness. A 9-day simple moving average, which I don't have on this chart, is very short-term. So for like short-term swing trades would be something to look for there, where you just get small corrections. But a correction below a 50-day simple moving average usually leads to a longer-term bearish trend there. And that's seemingly showing up in some of these other stocks, not the FANGs necessarily, but some of those are even starting to show topping patterns. We've got like even Apple looking a little bit toppy today. All of these patterns, again, seeing these candles where we're getting these hangman dojis at the top of this move is really starting to build up for me as a correction for a risk to the downside here. Now, at this point in time, we're still trudging, we're still marching, but we haven't seen any confirmation on the pattern where we need a big red candle right next to it, kind of similar to what we got here to get that confirmation of a top, and we haven't gotten that, but it feels like we're creating this topping pattern with several of these hangman dojis at the top of a move. Now, E-mini S&P, something to break down here. We got the topping pattern 4 days ago, all right? So on Monday, we got that topping pattern. Confirmation pretty much on Tuesday. Wednesday, it's not really giving us a whole lot. Today, we got these counter-opposing dojis. Now, usually that is an indication of a continuation. Now, something to note here, that continuation, some people might try to build a case that this is a continuation pattern for the bullish move, but I'm looking at this as a continuation pattern for the bearish move because we've gotten the confirmation, or one could say a engulfing pattern or a dark cloud over our previous hangman doji, right? Now we've got a spinning top and another hangman at the top of this pattern. You know, if you start breaking this down into a weekly pattern, that'd probably start looking like a pretty good top. So let's just take a look and see what it looks like at a weekly pattern. We've got this topping from last week, but today, you know, I guess on a weekly pattern, one could say that these two butting a butt could be that continuation pattern to the upside there. All right, so that's where we're getting a little bit of a mixed bag. That's why I'm not jumping on board with these topping patterns in the NASDAQ, the E-mini S&Ps necessarily. And I'm overall negative delta in my portfolio. So at the end of the day, I am a little bit bearish already, so I don't want to get too aggressively negative delta or bearish in my portfolio. Now, Las Vegas Sands, we've been talking about this whole travel and leisure segment of the economy. You heard me talking about the travel for the airlines. I think it's going to struggle a little bit more. I think people this summer are going to do more road trips. Remember last summer, everybody went out and bought those RVs, fifth wheels, travel trailers. Well, they're going to probably be using them this summer a little bit more so even than last summer, because remember last summer, a lot of our national parks were closed. So people could be taking advantage of that this summer. I think that is where I am leaning, is that it's going to be more road trips than airlines. Although the airlines do look like they might be trying to find a bottom here. I'm not playing that game. But for the rest of them, I think people are going to be traveling to Las Vegas and going to the casinos. They've missed out on that, getting out there and, kind of rubbing elbows with people, if you will. We've talked about this in the past also already, is that the casinos are already seeing an influx of reservations. As a matter of fact, some of them are, above 80% during the summertime, where if you've been to Vegas, it's even hotter than Arizona. But at the end of the day, people are vying to get out and travel and go places. Las Vegas Sands is already touted that people are coming and they are already booked. So I've been playing this alongside already. I'm still in this. I'm going to stay with it because a lot of these, like Las Vegas Sands, WYNN, are very much looking like they finally found a bottom. It is not confirmed on most of these, but at the end of the day, I think that we're getting a little bit of a bottoming pattern here. I showed Las Vegas Sands, the WYNN, MGM. MGM's a little bit of a different beast here because of the MGM studios and the casinos, and they're spinning off possibly the MGM studios. But you can see the casinos starting to look like we're getting these bottoming patterns at those moves. I'm long these names and been being run over, just albeit a little bit, but I'm staying with those long names because I think during this earnings season, we're going to see these guys really come out with much better than expected earnings. Clearly, one of the pups agrees with me there. And NVIDIA, if you guys remember, let's pull up some marker here so I can draw on this for you. We'll talk about this trade through a little bit because it can be possibly a little bit confusing. Now, when we got involved in this trade here, we were looking at it in and around, I'm going to get involved right here. So we got this topping pattern. Again, those setups of those candles, an engulfing dark cloud over our topping pattern there. The setup and then the confirmation right there is what I'm trying to show you there. I did get involved before it was fully confirmed by the end of the day. I went into the September spread there, and I did this as a synthetic short because we got that confirmation based on all the technical setups. We talked about this with market pulling back. We could see volatility expand, but we could also see that volatility come out if it was a slow trudge to the downside. It was right in and around that middle part. So I really wanted to avoid any theta decay, dealing with theta decay or volatility, because I just didn't really realize or understand if volatility was going, I didn't have a vision, I guess, if you will, or I wasn't sure if it was going to go up or down. Let's just say that. It was right in the middle. So I wanted to isolate volatility as to what it would do to the strategy. And in doing that, I decided on the synthetic short because I was very aggressively bearish in this underlying with the technical setup at these all-time highs. So I went into the September and I bought the 830 puts in there and sold the 830 calls. Now, the 830 puts were slightly in the money at the time. The 830 calls were out of the money, and I did this for a $5.80 debit. So 830 minus that $5.30 some odd cents, it puts me right around getting short at 824.70 or 824.20. Okay, so let's draw all this out. The September. Let's say on September 830 calls. Okay, so I bought the I sold the 830 calls, and then I bought the SEP 830 delta that makes it negative. And when I buy a negative delta that makes it negative, you add those together, we get 100 negative deltas. All right. So with that said, I did this for $5.80 debit on this. All right. So we subtract the debit from what we did. So my basic break even is 24.20. Okay, that's my break even. And basically that when you build a synthetic short or a synthetic long for that matter, you are building it out in or around where that underlying is trading. I show you in the webinars how you can basically short above where the underlying is trading or buy it below where the underlying is trading using this strategy. So please check that out for all those rules. I don't have the time to go into it, but now we've gotten short 100 negative deltas by doing the strategy this way. Well, I talked about it that we were going to come down here and test this basically area right around, that's a little bit high, but what I was talking here was the 775. All right. So that was that line that kind of puts me right in and around those support and resistance levels that I drawn in there a couple of days ago. Well, we came down and clipped that. So I've covered a few of these. I actually think that we are going to, again, stretch it out down to the Fibonacci here. Sorry, I thought I had a straight line on there. I think we'll come back down maybe even and test this. But I wanted to cover some of them because that was my first target on this trade. So with that said, I was able to buy these back for a $50 or $55.50. Okay, so I bought it back for $55.50 debit. So when we subtract that out of the 830, right, that puts me at basically 775.50 or 74. Sorry, 74.45. Sorry, doing the math. So my so I got out at 774. Sorry, I didn't do the math in my head before I did this. But I was shooting right around that 775 area. So with buying it back 55.55 there, I was able to get out right around the 774.45, which is that first target I was looking for. The next one I'm looking for is 715, which is a lot further down, but this is showing some bearishness across the board in this sector. So I'm going to stay with it a little bit longer. Think about it also, me covering some of those on my profit for such a nice profit. That also kind of increases my break even to the upside if this market really starts spiking. Okay, so right now my break even is in and around 825, right? Yes, 825 is right around where my break even is. I've just increased that, albeit by about $50 to the upside. I'm still going to be getting out on a breakdown in this pattern. Now my out is probably going to be right around 813-ish to the upside. 815 is probably where I'll call it, pulling the ripcord on a move to the upside here in this trade, at least as of right now. All things can change. And that's about it. That's all I've got going on right now. And checking out, like I said, staying with those casino stocks, a lot of underlying, seeing some topping patterns. Let's see if Apple still looks a little bit toppy. We could say that's a dark cloud. Even if it finished near the highs of the day, even if it finished at 151, this is still going to look a little bit toppy there. Some of the other ones, MasterCard, Visa is looking a little bit toppy. Visa a little bit stronger, but that's looking weaker as we go on. Even Google was looking a little bit toppy today. Let's see, Google. In the confirmation. So if you're looking at a shorter term trade here, Google confirming. Now it's not always, but we know that the probabilities are in our favor here. So Google might be something to add negative deltas to a portfolio as well. I'm pretty short already with NVIDIA. I don't want to overweight myself in the tech sector so much. So I'm probably going to stay away from that one. That's about it. None of you folks have any questions, or if you want me to go over anything, if you guys have any stocks you guys want me to throw up on the chart, go over some technical analysis with you, then I'd be happy to do that. Otherwise, throw it over there in the comments section, and I'll, like I said, come back around, and if I see something, maybe we'll talk about it in the next video. All right. So like I said, hit the subscribe button and click on that bell so that you guys get notification when I come on, shooting from the hip. Also, comments, anything, I'll circle back around, make sure you guys are clear concept. And finally, you know what? Smash that or take that. Bye for now and take it easy.